All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been off and rolling here this morning. Very heavy moves, in terms of the overall magnitude, but all of it happening within yesterday's range. It's just incredible the range, the magnitudes of moves in this market that happen so quickly. And, it's one of those where you start looking at option pricing and they get pretty ridiculous. When you have Bank of America options with 140% implied volatility, wow. And that's what the market's dealing with. We have, a big bounce back in some of the energy names here today, especially the ones that have been really ravaged, like a Halliburton, kind of fighting back here a little bit today. A little bit of strength in tech, but, just depending on which pocket you're looking at, it's one of those where, you have Halliburton up, you have Chevron down, right, in the energy space. In the tech space, you have Apple pretty much flat, Microsoft up $5. The percentage difference is very, very different here. But we are starting to see some things that are a little bit different shaping up in the market. And so I decided I will go out and take a look at it with you here this morning. Now, I want to kind of make this emphasis. And I've talked about this before, but when markets go kind of crazy, and even when they're normal, my approach to the market is to observe, not conclude. To watch, not analyze. Because I could go out and take a look at some of these things and make some sort of mass conclusion, and then boom, all of a sudden the price action changes, and okay. But when we start to observe some different things happening, now we can say, hey, are the odds shifting? And if the odds are shifting, there's a nice little trade element to come into play. Well, let's go take a look at some of the things that are a little bit different and a little bit changing here today. Let's start with the number of stocks above or below the 7-day moving average. Here's 7-day moving average crossovers bullish. Take a look at this. In the S&P 500, we have 28 stocks moving above their 7-day moving average today. And you say, well, that's only a little bit. And you're right, it's only a little bit. But it is the biggest number that we have seen since the pullback has started. Take a look at the stocks that are on it. Healthcare, tech, materials, communications, healthcare, real estate, industrial, tech, energy, industrial, financial, material. It's not a singular sector. It's not a certain area. These are broad-based. This is across sectors, across industries, where we are seeing stocks moving back above the 7-day moving average. Microsoft, Netflix. Take a look at ATVI. Blizzard. Okay, Blizzard, they're a game maker, right? And yeah, they've had a pullback during this whole stint. But notice how almost every day they gap down and go up. Only 2 days where they didn't gap down and go up. But, those they didn't really fall all that much. There's been a stock that has seen more buying pressure throughout this entire market pullback than selling pressure. We don't see many of these. This is pretty unique. There's an indicator that looks at some of this, and it's the advanced accumulation distribution line. And what this basically does is show whether there's more accumulation going on or distribution going on in the stock. And what it does is base it not on how much the stock is up or down, but whether there's been more buying pressure or selling pressure throughout the day. Compare this accumulation distribution line to a Boeing, right? Where it's just been distribution all the way down. Compare it to an Apple. Well, Apple, it's been kind of a little more accumulation than distribution. Yeah, Apple's down. Apple has fallen. But there's been more accumulation going on than distribution. What about Bank of America? When I saw this, I was kind of just blown away. We talk about all this selling that's going on, and there are pockets where it's very heavy. But take a look at the accumulation distribution. There's been more accumulation going on with Bank of America than distribution. Now, are there some flaws in this indicator and how it's used? Yeah, there are. But it's one of those where we are seeing some of these stocks like Bank of America, like ATVI, like Apple, where we are seeing more accumulation happening during this coronavirus sell-off than distribution. Here's Netflix. More accumulation than distribution. We don't have that with Ford, right? We don't have that with Ford. We don't have that with, we don't have that with General Motors. We don't have that with, Exxon, for instance. It's a lot of distribution. American Airlines, it's distribution that we are seeing, not accumulation. Royal Caribbean. There are a lot with heavy distributions. But when you look at a Bank of America, a Netflix, a Blizzard, and some of these names that are popping up on the list right now for stock moving above the 7-day moving average, there's this common theme of more accumulation than distribution over the course of this pullback. Very curious about Hess Corp. Okay. Basically had one massive gap down, and other than that, it's held up pretty well, but I'm not going to put it in that category. But overall, very interesting list. And as I look at what's happening in the market today, this is something pretty new that we are seeing start to emerge, and the stocks that it's emerging in are very interesting. Here's FedEx, where the accumulation distribution line is at the same level that it was before the whole pullback started. Wow. You don't see that very often. We could pull up an Amazon, for instance. What do we see? We see that since the pullback started, there's been more accumulation than distribution here with Amazon. Pretty incredible. And I know when you're reading the news and you're looking at the overall market and everything that's going on, you kind of say, hey, that's no. Everything's getting sold. Everything's terrible. Everything's, out there. But we are seeing some real dynamic changes that we just haven't seen in a long time because we haven't had these shakedowns in the market, that have taken place. Now, am I willing to go buy something just because its accumulation distribution is a little bit better? No, I'm not. But at the same time, they start to get a different spot on my watch list. They get a little bit of different treatment when it comes down to trading them. Speaking of different treatment, one of the other observations this week is take a look at the market. Nice little flat day today, right? Nice little flat day. Oh, geez. But take a look at the weekly chart. The S&P is down over 10% this week. Down over 10%. Now, we've seen it move 10% in a day, so, in the context of the movement that's out there, 10%. But I don't really care about the market. Market down 10%, fine. Take a look at Netflix on the week. Netflix on the week was green before I started this video. It's pulled back just momentarily here. But down 1% with the market down 10%. FedEx up 2% with the market down 10%. Amazon up almost 7% with the market down 10%. Costco up 1.5%. Oracle was green before I jumped on video, but down 3% with the market down 10%. UPS up 7% with the market down 10%. We're starting to see some of these really heavy divergences, these really strong outperformance, underperformance type of situations coming into the market. While Apple, has more accumulation than distribution, Apple's down 11% with the market down 10%. Okay. But something's going on. Netflix, FedEx, Amazon, Costco, UPS. Something's happening. We can go theorize all we want, right? And we can, come to whatever conclusions we want. But when we just look and start to observe where some of the buying action is going on at, by looking at the accumulation distributions and looking at the relative performances, when we start to see stocks that have more accumulation than distribution and are outperforming the market in a pretty serious way, these are the stocks that I expect to outperform going forward. Doesn't mean I go out and buy them today. I'm not going and buying Netflix today. I did look at it yesterday, but the options were just terrible. I looked at Chipotle Mexican Grill yesterday. The options were just ridiculous. But, it's just one of those things where that's the nature of this market. The options will team and everything else. But we have some very different action in certain names starting to happen. Now, speaking of different action, do we have any crossovers here in terms of the challenge? Well, let's take a look. Downside crossover, Procter & Gamble. There's been an outperformer here of late. Okay, has had more accumulation than distribution, pulling on back a little bit today. Very normal in bear market environments that we have one day's outperformer be the next day's laggard. It's not one where you can go and take the outperformance of 1 day or 2 days, or even like I did with Netflix and say, well, I'm just going to buy it because it's not going to go down. No, they could still go down. They're still vulnerable because we have margin calls going on. We have forced selling going on in the market. So everything has a vulnerability to it. But, Procter is held up in just a very different way than many other stocks. But downside crossover today, no bearish signal on it here so far this morning, but we'll see how it shapes up. I doubt we'll get a bearish signal on it, but we could. And then on the upside, we have a couple upside crossovers, Amazon and Target. Here's Amazon. Now, it is coming off a new low, so chances of triggering are pretty slim. But starting to see some of these upside crossovers is different. It's just something we haven't seen here so far. Are they likely to trigger Amazon and Target? They're very slim chances to trigger. Consolidation risk component on them is very high, and even if they did trigger, the options are just ridiculous. They're absolutely ridiculous. The VIX, the VIX itself here is still higher today. It's just amazing how sustained the implied volatility is in some of these options. So, we're not seeing that pull on back. Typically, if a bottom is in on the market, you're going to see the VIX pulling on back. But as I observe what's going on in some of this extreme volatility, I do think we're starting to see different stocks shaping up in different ways. And I have several lists of different stocks that have done different things on different days or weekly performances. And when most of this shakedown is done, I'll share with you the ones that, are most notable to me, the ones that show up on the most list to me, and the ones that I look at and say, I have to be involved in these going forward. And here's the timing as far as how I'm timing my exposure here to those. Okay, so observations, again, not conclusions, not something where I go, oh, well, there's been more accumulation in Bank of America than distribution, so let's just go buy any call option on it today. No, not at all. The call options are ridiculous. In fact, if you come in and you look at the call option values here, just for a tomorrow expiration, 172% implied volatility. Basically, if you buy the at-the-money strike, you need Bank of America to close at $22 at $22 to double your money. I mean, the stock has to move 10% by tomorrow afternoon to double your money. That's ridiculous in terms of risk reward there for it. And just something I don't want to be involved in, when there isn't really much reward side there to it. Now, to move 10%, it easily could. In fact, if we just look and chart Bank of America over the last little bit, it's traded between in the overnight session, traded at 21.39 all the way down to 19 today. So in less than 12 hours, this thing has moved more than 10%. So there's reason that the market is pricing in such a big move, but it doesn't bode well if you don't get that move right away, real fast. And so keeps me on out, at least here for now, from the options side of things. Okay. But keep an eye on some of those stocks, the Amazons, the Netflixes. We've talked about several of these. The accumulation that we're seeing at Apple, the accumulation we're seeing in some of the banks. It's not as bad as some of the fear and the headlines and everything else is. Yes, is it bad out there? It really is. It is bad out there. We're going to have some massive data drops in terms of the economic data. And, one thing that we saw here today, and it's the last point I want to make on this video, is we talked yesterday about the heavy money that is going to be thrown at these markets. And we've seen it start. We saw it continue here today. The European Central Bank throwing massive money at the markets. The Fed doing their own money market manipulation or manipulation. That's not the right word, is it? But supporting of the money markets. But, we're going to see some pretty heavy government spending. Not just here in the U.S., but in other countries. We've seen giant China drop some huge money into the markets. And they're going to have to. Why? Because there's a lot of unemployment that's coming. The unemployment data is going to be pretty lousy. We are seeing, some of the data start to come in that reflect what we're seeing with the coronavirus, but it's still early. One example is the Philly Fed Business Outlook dropped down to minus 12.7. These are kind of small numbers compared to what we're going to start to see here with them. If you look at the leading indicators, it came in at 0.1. Well, this is just a little too lagging to capture what we've seen in the coronavirus stuff. But we're going to start to see that in the data going into next week and beginning in April. And so the market's going to have a couple rounds of very bad data to deal with. Keep an eye on that, because if we start to see a really negative data and the market reacting to the upside, it tells you bottoms are in. If we see the negative data and the market continuing to sell, then there's still a lot more to go. Thanks for hopping on. Have yourselves a fantastic day. We will talk to you this afternoon. Take care.